All right. Well, good evening, everyone. Thanks for hopping on tonight. We had like 50 people registered, but it is the holidays, so you never know. People are very busy. So I really appreciate you guys making time this evening. We're gonna get started in just a few minutes. Um, can y'all go ahead and just drop in the chat for me and let me know if you can hear me okay, if everything sounds good. That would be awesome. We are getting ready to roll. Not sure if y'all were able to hear me. Can y'all hear me okay? Got a thumbs up. Thank you. Thank you, Haley, for the thumbs up. Thank you. Awesome. Well, I'm super happy to be here. And I know others will probably jump in as we send out a few more text messages to just let everybody know that we are getting started. What tonight is all about is this is a first time homebuyer class. So if you were here, presumably this would be your first time buying a house. But even if it's not, there's still valuable information if it's been a while. Mainly, what we want to focus on this evening is helping you avoid very costly mistakes. I also want to make sure if I can get a thumbs up or a yeah in the chat. Can you guys see me okay? Does everything look good? Awesome. So we're good to roll. Okay. So that's kind of what we want to focus on tonight is avoiding costly mistakes and then teaching you guys about a little bit about the different programs and mainly what I want to do, which is my absolute favorite part of all of this, is making sure that I have ample time to answer everyone's questions. So we'll have Q&A. We'll pause periodically for questions, and then I will spend the whole entire end of the class just making myself available for questions. I try to get through the material in about 40 minutes. And again, like I said, there will be chances to answer questions along the way. I feel like, engagement is good. So let's just go ahead and jump in. Again, I'm happy. So I want this to be interactive. You can choose your camera to be on or off. It's your choice. Definitely make sure you have the chat box. You know where it's at. Say hi, raise your hand while you're at it. Make sure that feature's working. I posted in the chat. I'd love to know where everyone is joining us from. So if you wouldn't mind, if you don't mind, like, hey, where are you watching us from? What part of Florida are you in? And then stack up the chat box with your questions. So we want to make sure that we answer your questions during that Q&A section. So Tampa, I love it. I love it. So as I'm talking, if you think of a question, you can punch it in the chat box. When I go to the Q&A section, I will jump on that question and answer it as we move forward. So here's a good question. First one. How's everybody feeling tonight? Are you concerned? Are you stressed out a little bit? Intimidated, anxious, uncertain, excited? Right? Home buying tends to bring out lots of emotions in people. If you didn't know that, it does. It's normal to be anxious. It's normal to feel uncertain, and it's normal to be excited. Right? How's everybody doing tonight? Let me know in the chat. Great. So our goal tonight is I want you to feel prepared and at ease. Thank you, Tresha. She says she's doing good. I want you to feel prepared and at ease about the home buying process, right? So we want to give you some ammunition to know exactly what you're supposed to be expecting so that you can feel great about this process. I'm Channing. I'm a dad. I'm a believer. Those are my two boys and my wife and our goofy Labrador Dash, who we rescued about 4 years ago. So that's just a little picture of me and my family. We took those pictures last Christmas at a Christmas tree farm. I love helping home buyers. It's my favorite thing to do. This is a couple of pictures of people that we have closed with. And so It's what we do, and we specifically love helping first-time home buyers. It's pretty much our entire focus. We helped a lady named Tanya. She attended a home buyer class just like this. And after 27 years of renting, they were able to purchase a home. Uh, she said we took her to school. It was an easy decision. So really loved working with Tanya and her husband, and love working with everyone that we get to meet through these classes and helping you guys. It's such a big step, right? It's such a big thing, a big part of your future. I really enjoy doing that. So let's jump in. And ignore that link. I had to change it a little bit. It will work, but it won't be the right one. What are the steps to home ownership? So the very first thing, you guys are already off to a great start because you're here. You've jumped into this class. You're watching it. It'll have a recording as well. So we will send that out if you ask for it, if you want to go back and revisit anything that we talked about. But this class is a great first step. The second step is to get pre-approved. Now, that's a little different than what most people do, right? Maybe some of you, even now, you're like, I've been shopping for homes or I've been on Zillow, right? Getting pre-approved is the best part, unless you're paying cash, which if you are, you're probably not on this class. But unless you're paying cash, getting pre-approved is the best first kind of step other than learning about it, because that actually was where the rubber meets the road. That's where we're going to be able to give you real numbers, real opportunities, here's what the budget looks like. You tell us, we kind of show you kind of how those things fit together. And then finally, once you do that, you start shopping for homes. And of course, you can shop for homes on your own. You can work with a real estate agent. That tends to make things a little bit easier, especially if you get a good one. We can help with that. And then you're going to make an offer, right? Once you find that home, once you go out and you look at Zillow, you got your realtor, you're touring homes, and this is the one, you're going to make an offer to the seller. Now, this is where the realtor really shines if you work with one, because they can help you negotiate. And so they'll act as a middle party between you and the seller's agent, to go and start shopping, or to go ahead and start making that offer, negotiate on the price, negotiate on the closing costs. Once you have an accepted offer, right? You said, hey, I want to buy this house for 300 or 250 or whatever the amount is, right? And they accept your offer. That's when the ball starts rolling again on the mortgage side of things. So you get pre-approved up front, and then we kind of wait for you to find a house and get under contract. Once that happens, then you're going to be looking at home inspections and appraisals. People ask all the time, is a home inspection required? No. You don't have to get a home inspection in order to buy a house, but it is very wise to have that done. There are some insurances that come along with that. So if you have a home inspector, typically they will have some type of an insurance that if they miss something, you at least have a path to deal with, anything that could go wrong in that environment. So home inspections are great. The cost typically varies. They're going to be anywhere typically between $300 and $600, as long as it's a normal size property, as long as it's, and location dependent as well. Next after that is the appraisal. So you've gone under contract, the home has been inspected, you still like it, you still want to buy it, because you can back out if you have a bad home inspection. Then we're going to move forward with the appraisal. The appraisal costs you money as well, typically about $600. Again, these are all the appraisal, not the home inspection, is factored into your closing costs, but it is something that you pay up front, and it is non-refundable. Once all of that's done, you're going into underwriting, or kind of at the same time, you're going into underwriting. That's the scary people with the pencils that are dotting the I's and crossing the T's, right? Their job is to review all of your documents, to review all of your everything that you provided, your pay stubs, your W-2s, your bank statements, right? Everything that proves that you are who you say you are, you make what you say you make, and you have available what you're saying you have available in terms of down payment, closing cost, whatever. Once they've done that, they will do what's called a conditional approval. A conditional approval means we agree to approve this loan as long as these conditions are met. Like appraisal, they may ask for a new pay stub. They may ask for a few different things. It's kind of a back and forth until the end. So we always have to be ready to provide new information or answer questions or different things like that. underwriters typically like to ask lots of questions. Now, if you work with an experienced team and an experienced loan officer, they're going to collect all of that stuff up front, typically. Most of the stuff they're going to get from you up front, and it's really going to minimize the amount of back and forth, unless you have a difficult file that you're going to have to do with the underwriter. And then once it's approved and your appraisal comes back and everything's good, you get to close on the house. You show up at the title company or wherever it is you're closing, maybe the attorney's office. You bring a check or a wire for your funds that are going to go. You bring your driver's license, and then you leave with keys. You get to leave with keys to your new home, and then you get to begin the process of moving in. Right? Everybody loves moving. It's so much fun, right? Anybody love moving? Probably not. Probably not. So that's the steps, though. That's the steps to buying a house. Kind of the 7 steps to getting it done. I find that it's really helpful for you to know that going in, because then you kind of know what to expect. Typically, this process, now, how long it takes you from pre-approval to find a home, that's up to you, right? That depends on what you're looking for, how easy it is to find. Once you find the home and you've gone under contract, it should take 30 days or less to close on it, unless you're doing like a renovation loan or something like that, where they tend to take a little bit longer. Let's talk about the first mistake that home buyers make. Everybody's still good? Everybody's still with me? Let me know. Mistake number 1, we've got some new folks jumping in. So welcome everyone that jumped in. I'm super happy that you're here. Thanks again for the thumbs up. Is ignoring first-time home buyer options. Mistake number 1, ignoring first-time home buyer options. What are first-time home buyer grants? That's a big question that a lot of first-time home buyers ask. So let's talk about them. First-time home buyer grants, you have, quite a few different ones in Florida. There's the hero ones. There's the state-provided one, tends to run out of money pretty quickly. They're specific to your area. So if you're in Tampa or Sanford or wherever you're watching from, Jacksonville, wherever, there's going to be specific programs available in your area, but they are often dependent on your income. So typically, 100% of the area median income or less, sometimes 80, sometimes a little more, you're going to have to make within a certain range, which again is dependent on your area, right? The median income, let's say in Miami, would be different than in Orlando, let's say. So there's not going to be a down payment. Once you do a home buyer grant, there'll be no down payment requirement, or it will be reduced. So like we have access to some nationwide stuff where it's a 1% down payment. So they cover the other 2.5%. You only have to come up with 1%. Those are nationwide. Typically, your local programs are going to cover the entire down payment. And it will either be via the form of a higher interest rate. This is how it works a lot of times. So let's say the normal rate you qualified for, I'm going to use even numbers here, is a 5. You may have to pay 6.5 to get the down payment assistance. So that's one way they do it. Another way that they can do it, and this is the case for a lot of state-run programs, is it's going to be a forgivable second mortgage. Now, what does that mean? That means that as long as you stay in the house for X amount of years, could be 5 years, could be 7 years, then you don't owe them anything. If you try to sell the house before that, you have to pay back the second mortgage that was placed on the home, right? For the down payment, the closing cost, whatever it is that you got. There are a few different types of mortgages. I see my little presentation here has a couple typos, but there's a few different types of mortgages. Let me know if you've heard of any of these mortgages. There's conventional, there's FHA, there's USDA, and there's VA. We're going to talk about a couple of them tonight. So if I'm not covering one and you have questions about it, like VA specifically, we don't cover. It's an awesome program. It's my favorite program. It's its own thing. It's its own presentation. It's an amazing program. If you're a veteran, just let me know and we can have a conversation about VA. If there's no veterans on here, then I don't think it'll apply very much. But the other three are the most common. These 4 are the most common types of mortgages. So FHA loans, the Federal Housing Administration loan, provides mortgage insurance on loans made by FHA approved lenders. So here's something really important. FHA doesn't make loans. So if you get an FHA loan, you're not getting a loan from FHA. You're getting a loan from the bank, but FHA is telling the bank that as long as they meet the requirements, if they don't pay their mortgage on time, we'll deal with defaulting the loan and we'll give you X amount of percentage back, to cover your losses, basically. So it's more of an insurance program, but the banks are still the ones offering the loan. Now, the benefits of FHA, this is what we love about FHA loans, is that they have a low down payment. It's 3.5% down. So if you have at least a 580 credit score, you can purchase a home. Typically, there's other factors that we'd have to look at, like why is the score 580? If you have late payments in the last year, that's going to create issues. But if you have as low as a 580 score, you can put 3.5% down. You can purchase a home, and actually the interest rates aren't as terrible as you might think. The other side is if you have, lower score than 580, they will go on our side as low as 500 with 10% down. So if someone's in here and you've got a rougher credit profile, you may have options. Again, it's a little tougher for you, and we can help you with that. We'll help you figure out if it's actually something that's doable or not. The other thing that I love about FHA is that they have easy refinancing with the FHA Streamline. Now, this is really important in this environment, right? I would bet all of you right in this room right now in this Zoom class, and you can correct me if I'm wrong, have a concern about what the interest rates are. You've heard that they're not good. You've heard that they were good. They're not good, right? We've all heard stuff. The news has talked about it. One of the things that makes FHA so great is that with the streamlined refinance, we don't have to get new income. We don't have to order a new appraisal. We all we have to do is a credit pull again, and we can actually refinance your loan if the rates go down. Now, there's other nuances to it, but it is a great program if you're just trying to get a lower rate. Let's say you buy a house today and your rate is 5 or 6%, and they drop, next year to 4%. Well, you're going to have an option with this. Any loan you can refinance. The FHA just makes it a little easier. Again, they have lower interest rates. They are typically lower than conventional loans right now. So even if you have a higher score, sometimes FHA beats out conventional unless you're doing like 20% down or something like that. So, and then higher DTI ratios. What is DTI? It is called debt to income ratio. I have a video on my YouTube I can share where I really break this down. I don't want to spend too much time on it tonight. I think we address it actually in a little while, but it is basically your monthly bills divided into your monthly income. That is a debt to income ratio. And you typically can go up to like 55, 56% on FHA. You can also choose between a 15 or a 30-year fixed rate or adjustable term. Adjustables are not super popular since the 2008 crash, but they are out there. There's also down payment assistance programs or grant programs available. We have nationwide ones available. There are also, like we just talked about, local programs as well. And then my favorite part is the seller can actually pay up to 6% back to you in closing costs. So if you have a down payment but you're not sure about closing costs, you can actually negotiate for the seller to pay that. And one of the great things about the market that we're in right now is that you are able to kind of get more of that than you were over the last 3-4 years when rates were 3%, 4%, where you better have cash because you were going to be in a competing with people even in markets that aren't traditionally super competitive. Now, my next favorite loan, and it's a great loan in Florida, is the USDA loan. And it's a government-backed mortgage designed for buyers buying in rural or suburban areas. It's available through the U.S. Department of Agriculture, and it aims to assist low to moderate income individuals or families with no down payment required. However, the USDA's definition of low to moderate income may be different than yours. It is over $100,000 per year in annual income would still qualify with USDA. That is more than most down payment and grant assistance programs. And they define rural typically as areas that have 25,000 or less in population. So you'll often find that suburbs can qualify depending on what city you're in. Obviously, if you're in Miami or Jacksonville or something like that, you're going to have to go further out. But it's a great program. There's no down payment required for USDA as long as the property sits in an eligible area. It has flexible credit requirements just like FHA. It has competitive interest rates just like FHA. And it has lower mortgage insurance than any of the other programs. It is the lowest outside of conventional with a large down payment. There's also assistance with closing costs, the same as FHA. The seller can pay 6% of your closing costs. So it's actually possible, guys, to get a USDA loan and be out of pocket about $1,000 or less, all said and done. It happens all the time. So one of the programs that we actually specialize in, we do quite a bit of them. We have a special lender for them that has a special connection with the USDA, so we're able to get them done really quickly. Eligibility in rural and suburban areas, those we talked about all that. So everybody's still with me? If I can get a thumbs up. I know I'm moving quick. It's because I value your time. So if I'm going too fast, just say, "Hey, man, you're going too fast," and I will slow down. But I know that we're in the holiday season, and I want to honor your time. So, what can you and can't you use for a down payment? Well, you can use a 401k. You can use a retirement account either via a withdrawal. Now, there may be a penalty depending on your account, or via a loan. Sometimes 401ks, you can take a loan out, repay yourself back, and then if you lose the job or whatever, then it counts as a withdrawal. You can use gift funds. So if you have a friend or a family member, typically more family, but friends sometimes, can gift you money for your down payment or your closing costs. There's a process for that where we have to get letters and bank statements and different things like that. You can use stocks, bonds. You cannot use cash. So credit cards you cannot use because they are unsecured debt. Can you get a loan for a down payment? If the loan is secured to something, you can, but I will tell you it's a giant pain in the butt because they're going to pull in a value on whatever it is that you took the loan against. And if it doesn't match up 100%, they're going to give you a really hard time, and it just adds a lot of complexity to it and a lot of frustration usually. Cash cannot be used. Now, this is the big one, right? So some of you guys are awesome savers and you have been socking away cash, but you've been keeping it in a safe, or you've been keeping it in a drawer or in a hole in your backyard or wherever it is that you've been keeping it, and you can't use it. The money has to be traceable and trackable thanks to all sorts of laws that have been passed for money laundering and different things like that. So if you have cash, my advice would be go ahead and deposit it in a savings account and let it season for 60 days. Once it's seasoned for 60 days or 61 days, then it's usable because it's been in your account. We only go back 60 days on bank statements. So that's my advice to you if you have cash. If anyone has any questions about that, let me know. I'm going to take a pause here just in case anybody's got a question. The 5 C's of approval. This is basically like, what are we looking at? What is the underwriter looking at in order to determine if you can be approved for this loan, right? That's what we're looking at here. So the big one, it's character. This is kind of an old school way to say it. It's your credit history, right? Everybody kind of knows that. It's probably our biggest question we get. Everybody kind of knows they're going to be looking at your credit. So they're not just looking at your score. They're actually looking at how well you pay others back. And so obviously, if you don't pay people back, then your score will be lower. Or if you maybe had an instance in the past where you didn't pay someone back, or a medical thing or something like that, although those laws are changing, those can impact your credit history. So they're looking at the score, but they're also looking at, do you have late payments? And if you have late payments in more than one, typically in the last year, that creates an issue. If not, you're good to go. They're going to look at number 2, capacity. This is your debt to income ratio that we were just talking about. Basically, do you have the money based on the guidelines that are set forth by each agency to repay this loan? That's the most important thing. The ability to repay the loan is more important than your down payment. It's more important than your credit history. It's more important than everything. You can get a loan with bad credit, and you can get a loan with no down payment. You cannot get a loan with no income. So that is the most important factor is can you qualify based on that? Then they're going to look at your capital, right? This is your down payment and your closing costs. Again, you may be using a zero down program and you may be getting your closing costs covered by the seller. Perfectly okay. That's perfectly okay. Just someone that's eligible has to cover those costs. And then they're going to look at the collateral itself. This is the home, right? That's what the appraisal is about. That's why we're having an appraiser go out there to make sure that the person that is selling the home is selling it for the right price and it's not overvalued. It's okay if it's undervalued. It's not okay if it's overvalued. And again, that is based on the appraisal that is done during the process. They also want to make sure that the person that's selling the home is legally the one that can sell it and that they are legally able to sell it. That's another really important part. So there are title issues that happen all the time where the home may have fallen to heirs and they didn't have the proper legal stuff done. So that's another thing. This is what we call getting title work done. That's why it's done, to make sure you're not getting scammed and the bank isn't getting scammed. And then finally, they're going to look at conditions. This is your job history. Now, you guys have probably heard, you've probably heard that you have to have a 2-year work history. It doesn't have to be 2 years in the same job. You just need to have 2 years of work history. Now, the exception to that would be is if you're commission or self-employed, then you do need to have 2 years, typically not necessarily on the same job, but making commission or being self-employed, or you're not going to be eligible to purchase a home. We do have a video on the Bayou Mortgage YouTube channel where I break down how to get approved for a mortgage if you're self-employed. If that's you and you want that, drop it in the comments and I will drop the link to that before we end tonight. Now, let's pause for a quick Q&A. This works great if you guys have questions. If not, let me know. I also want to mention that one of the reasons why we do these classes is to teach you guys, and we'd love to have one-on-one conversation. I would love to have a one-on-one conversation with you. I have an even simpler link if that's something that you want to do, and I know we're only kind of partway through the class, but if you want to just set up a call with me and go through that, I've dropped it in the chat. It's simple, workwithchanning.com. We'll take you to my calendar and you can book a call there. For everybody that's here, do we have any questions so far? And like I said, I know I'm kind of moving quickly through the material. You guys are quiet tonight. Everybody's quiet. All right, I'm going to move on. Mistake number 2, not getting pre-approved. We talk about this at the beginning, that it is the most important first step. Let's talk about why. Why is it so important? If you don't get pre-approved, here's what's at stake. You're going to go shopping for homes. You're going to go working with an agent, and you're going to want to make an offer on the home. And a couple things are going to happen. One, they might let you make the offer without asking for the pre-approval letter. It's rare, but it happens. So you're going to make the offer, and then you're going to be in a contract for something that you have no idea if you can actually finance. There's all sorts of ways that can go sideways. Yes, you have contingencies and different things like that let you get out. But if you put up earnest money or if you pay for an inspection, you don't get that money back. So really the pre-approval is about saving you money. It's about making sure that you're able to do it. The other thing that can happen is you've been looking at homes at 400,000 or 300,000, but maybe you only qualify for 250, or maybe it's only 350, right? Well, I don't know how many of you have realized this, but there's a pretty big difference between a $450,000 home and, let's say, a $250,000 home or a $300,000 home, right? And so now we've gotten used to looking at this type of home, but our budget is this type of home. So that's another reason why it can be really painful to not get pre-approved. There's 3 keys to getting pre-approved. We kind of just talked about this. There's 5, but these are the 3 that we're looking at. If you at the end of this call say, hey, I want to do this, this is what we're going to do. We're going to do an application, and you don't have to do that. I'm just telling you how it works. You're going to get your credit pulled. You're going to provide income information like W-2s, pay stubs, if you're self-employed, tax returns, that kind of thing. and you're gonna provide bank statements that show your assets. Do you have a down payment at Chase or Capital One or whatever your bank is, right? We're going to look at those documents and we're going to say, based on everything you've provided, here's the amount that you can be pre-approved for. We're going to give you a letter that says that in writing, right? It's conditional, but we've been doing this for a long time. If we sucked at it, we wouldn't have, all the 5-star reviews that we have. So those are going to be the keys to your mortgage approval. So if any one of those areas is weak, that's going to create, an issue where we're going to have to figure out how to move forward. Now, like I said, we can move forward a lot of times with credit. We can move forward a lot of times with assets. You can't have bad credit and buy a house with no down payment, but you can have bad credit and buy one with a 3.5% down payment. And if you have decent credit, 620 or above, you can potentially buy a house with no down payment. But what you can't ever do is buy a house with too little income. If you don't have the income, then it's going to create issues, even if you have a crazy down payment, right? You have to have the ability to repay the loan. So, like we said, pre-qualification helps you determine how much you can afford to spend on a home based on the 3 factors we just talked about. It determines what house you qualify for. Now, really, guys, what you're qualifying for is not an amount like 400,000. It's actually a payment, right? Because we're looking at debt to income ratio. So we'll tell you 400,000, but you could look at 2 different houses. There's some areas in Tampa where the property insurance in one area is going to put you way over your budget because, the insurance is going to be so costly. So, it's really more about a payment, but it will help you determine what payment you qualify for, which will then back you into a roundabout way of understanding what loan amount you're going to qualify for. It does increase your bargaining power when you negotiate with the seller. They're not going to typically let you make an offer unless it's a for sale by owner and they don't know any better without getting that pre-approval letter. More important than that, though, you're going to know about what your monthly payment's supposed to be and how much it's going to cost you out of pocket. And, it's really important if you're going to build a building that you know how much it's going to cost, right? So this to me is the main deal. Every one of you watching this right now, even if you haven't necessarily thought about it yet, you have an idea of what you can afford to spend every month on a house, right? Maybe you're paying rent already. Maybe you've already just thought about this, but every one of you has a monthly budget idea. So you'll be able to get into that monthly payment and that total out-of-pocket expense when you go through the pre-approval process. There's a document called the loan estimate that is provided to you, and it is literally an itemized charge that goes through everything. One of the things that we do when we work with people is we don't just send you that document and say, here you go, read it. We actually create a video for you where we go line by line with you, and so that we make sure that you fully understand everything that you're getting into in terms of payment and money out of pocket, because transparency is something that's really important to me. It'll help you identify which loan product that will fulfill your needs, which is how we get to monthly payment and total investment, right? Do you go FHA or can you qualify for USDA? You may be thinking, I gotta get 3.5% down, but you might qualify in the area that you want to buy for USDA, and you might be good to go now. You just don't know until you go kind of through this process. Now, let's talk about tips for a smoother loan approval. Some do's and don'ts, if you will. So whether you work with me or not, whoever you work with, you always want to keep the line of communication open and keep it frequent. Call with questions. Don't change addresses. Don't stop paying your mortgage or rent. Don't max out your credit cards. Continue to use your credit as normal. Keep working at your current job. That's a big one. And this one happens a lot where you're in the middle of buying a house and you lose your job or you quit your job. You've basically just killed your mortgage. You have to wait until you get a new job and you have 30 days worth of pay stubs. So people typically will not wait around for you to do that. So that's a really big one. You can't quit your jobs. If you think you're going to change jobs, you better wait. It's usually better to wait until you do that versus starting the process and then be in the middle of it when that happens. If you're refinancing, that's not really the case here, so that doesn't really matter. But keeping the same insurance company. But more importantly, stay current on all existing accounts And then expecting requests for additional documentation through the process. That's a big one. It's a give and take. Like I said, loan officers or underwriters ask for stuff, and then we have to give it to them, or they won't give you money. Um, you want to avoid making large purchases before you close. So no going buy a BMW, no going buy all the furniture for your fancy new house until you've signed the papers and everything is done. Don't change your bank accounts or make large cash deposits. Typically, anything over $500 to $1,000 has to be sourced. And if you can't source it, then we have to exclude it from your overall balance. Uh, Obviously, you want to keep transfers down to a minimum two, because at that point we're having to go back and say, okay, I need this statement because there was a transfer on this statement, and then I need that statement, and it can get out of hand quickly. We do it, but these are just, smooth loan, right? The least amount of going back and forth as possible. Don't close any credit card accounts either, because those tend to tank your score. Um, Consolidation as well, unless it's like we're working with you and we're like, hey, you need to do this consolidation for debt to income reasons. That's different. Um, but really, you just kind of want to leave your credit alone until you're done. That includes applying for new credit or taking out a new loan or co-signing. Don't co-sign for anyone. We have to count that debt as yours, unless you can prove by 12 monthly receipts, like checks written or coming out of their bank account, that the other person is paying for that loan. And then obviously, like we just said, don't max out or overcharge your credit card accounts. When you start going over the limit, um, when you start going over the limit of your accounts, it starts to really, really negatively impact your your credit score. Um, if you're married, can you buy the house alone? Great question. Or does it have to be purchased together? So it depends on which program you're going to go with. Um, you don't have to ever buy a house directly with your spouse. Um, but there are different guidelines. So Florida is not a community property state. So you don't have to buy the house with your spouse. Um, Sometimes in community property states, which again, Florida's not one, so it's not, doesn't really matter, that you have to count their debts. But with Florida not being a community property state, you're good to go. Now, if you're divorced or you're going to get divorced, but you're not yet divorced, that can create some additional stickiness, because until you're officially divorced, they could potentially lay claim to a portion of the house. Those are more lawyer conversations than Channing conversations, but that's, you don't have to. You don't have to. So, hopefully that answers that. If not, let me know. Mistake number 3 is using your bank, right? Everybody has a bank. You have the place where you have your checking and your savings account. And it just seems naturally like they have my money. Let's ask them to give me some money for a house. But um, using your bank is usually not the best move. Banks typically don't offer as many types of mortgages as somebody like us, and they tend to have much higher credit requirements. And then they also tend to have much higher interest rates. There are some exceptions to the rule, like a credit union may have low rates at times, but sometimes they only do 20-year loans, or different scenarios like that. Banks also have stricter income rules, making it harder to get pre-approved, and they definitely take longer to process your loan application across the board. If you try to get a mortgage done with a bank or a credit union, very rarely, very rare exceptions, it's going to be 45 to 60 days, because they have other stuff to do. This is not what they primarily do. And you're going to have a very stressful time, because in the real estate industry, it's 30 days or less. That's kind of the expectation. So if you try to give a realtor like a pre-approval letter from your bank, they're going to start asking you lots of questions, because most of them have been burned by banks that don't answer the phone. They don't answer your calls, except when it's convenient for them. So that's kind of something that goes into that. Like I was saying, they don't give you as much one-on-one support during the loan process. They typically do have higher fees, like underwriting fees, processing fees. And then they don't know as much about special loan programs. Like I think about one of the bigger banks. I won't say their name, but they don't offer USDA. And so there's a lot of people that could go zero down, but they don't, because they go to this bank, and then they end up not being able to utilize that program, or thinking they can't buy a house. We get a lot of that. And then kind of into that, banks can tend to require a larger down payment. Let's talk about rates and assumptions because this is where people get tripped up. And I know a lot of you guys in here, you're rock stars. You've been taking care of your credit, so I know you care about rates. When you go shopping online, this is an example I think of Bankrate or something like that. This was back in August, so forgive me for that. I didn't update it, but um, when you go and you look at rates online, this is very similar to how they look, right? And so you can see like Homeland, um, 5 point, oh, sorry, 5.625, 30-year fixed rate, APR 5.825, right? And you're like, that's a great rate. I want to get that rate. Um, but here's the deal. It's 1.715 points. That's a lot of money. If $300,000 times 2%, that means that you're paying, right, 1.63 points, 1.598 points. That means that you're paying multiple thousands of dollars to get that rate, which most first-time home buyers simply don't have. So this is something to really pay attention to. If you're gonna shop rates, which is smart, do it. I'm a broker. We have 100 lenders that we offer. We shop rates for our clients. I love it. You need to understand what you're looking at. And the flip side on the right side is you need to understand the assumptions. These rates are based on someone with like a 780 credit score putting 20% down, buying at least a $450,000 house. You start messing with those things and the rates change very quickly. So it isn't that most lenders, I mean, some do, some have high rates and they don't want you to know that. That's not the case for us. As a broker, it's just there's too many different variables to say, oh, the rate is 6%, right? If you have a lower score or you're doing a different program, it's just too hard to give somebody a quote like that without having at least somewhat of a conversation with them. We don't always have to pull your credit to give you an about. It just, if we pull your credit and your score is different than what you tell us, then that's not on us, right? But just know that going in, that when it comes to rates, these are what's called teaser rates, and they're designed to attract you in. That's why they have so much, legalese and everything surrounding them, because they're designed to attract you in for inevitably letting you know that that's not the rate you're going to be able to get. So just wanted to include a bit of that in here. If there's any questions about rates, I'm happy to answer them. Let's jump into mistake number 4. We're almost done, and we'll jump into Q&A time. Mistake number 4, buying directly from a builder. This has gotten really, really popular because of the low inventory that we went through. You need to be careful when you're buying with a builder, okay? The truth about buying straight from the builder is that the closing cost assistance can be a bait and switch for a higher interest rate. There is a very big builder that advertises very low rates, but what they don't tell you is that, number one, it's a buy down. So they're telling you can get 4%, but that rate goes up to 5% at the next year, and then whatever the real rate is the second year. So you have to be careful with that. If you're going to buy from a builder, work with a realtor that you know. Don't ever just walk into a builder's office without representation for yourself. They are not there to protect you. They are there to make money. So you want somebody that's in your corner if new build is the way you want to go. A realtor will work for you. And I'm a mortgage broker. I'm not a realtor, right? But I'm just telling you the truth. They'll work for you, and the sales agent works for the builder, right? So when push comes to shove, they have a boss that they have to answer to, and they're not going to lose their job over you. A realtor can help you make the best decisions financially as you build. They can help you make sure that you're not getting messed around, or any of the things that can happen when you buy with a builder. People think that because they're new homes, they don't have problems. They have just as many problems as pre-built homes. And you can go look at the stuff out there about warranty claims and stuff like that. It's all out there. They all have issues, just like any home. A realtor is knowledgeable about what to look for during inspections and final walkthroughs. That's another key piece of it. So I'm brief here because this isn't really my wheelhouse in terms of, I'm not a realtor. I can't represent you on the real estate side. But they will try to switch you to their title companies. They will try to switch you to their lenders, and they will offer you a lot of incentives to do so. And sometimes it's like, hey, that's a great deal. You should absolutely do that. Other times it's a bait and switch, and you really need to be careful. And it kind of depends on the builder. The other side is the builders that tend to offer the most discounts tend to have the crappiest houses. right? They're not well built. They construct them in 3 months. You just need to think about those things whenever you're buying a house and you're committing to 30 years, right? I'll say one more thing on my builder soapbox. You also, if you decide to go new build, you need to think about this. How many phases are there going to be? If you buy in phase one and you have another kid or you need to transfer, it is very difficult to sell a used home in a neighborhood where they are still building new homes, right? When I can buy the new house for cheaper or the same price that I can buy your used house, that becomes a problem. And it takes a while, unless you put a large down payment down, for you to have equity in that new home. So that's free advice. Take that or leave it. Mistake number 5, we're rounding the corner here. Skipping a home inspection. We talked about this, right? We talked a little bit about this earlier. Why do you want to do the home inspection? Because if you don't, it can cost you thousands. You could purchase a house that's unaware of deal breakers, right? You didn't know. You didn't know that the electrical panel was 100 years old. You didn't know that all the light fixtures were put together with bubble gum, right? Like you didn't know. Also, when you don't do a home inspection, you lose out on negotiating power, right? That inspector's job, and people get scared by it, but their job is to literally find every single possible thing that's wrong with that house and put it in a report. That can give you negotiating power. Now, it can also cost you the deal if you get too particular or too picky. Some things are not deal breakers for you. Try to stick to the things that are, but it can get you more closing costs. It can get you a lower purchase price. Or if you're like, this house is a piece of crap, then you could just back out. There's nothing, during the inspection period that binds you to the house. You would even get your earnest money back during that inspection period, which is 10 to 14 days typically once you sign the contract. So you got to do it quickly. You risk inheriting non-structural safety issues such as mold, radon, carbon monoxide. There's all sorts of stuff. And then you miss having a forecast of future repair costs, right? They're going to tell you like, hey, this roof is, 15 years old. You're going to have to replace it soon, right? They're going to do all of that stuff. And if you don't have the home inspection, you're going to miss out on that. Even if you're handy, right? Even if you're handy, I'm just telling you, these guys are trained to like look at all the little things that can save you money. And then obviously, if there's anything illegal or code violations or anything like that, maybe due to a remodel or an addition or whatever they did, home inspectors are often trained to be able to, if you work with a good one, check their reviews, make sure they've been in business for a long time. The realtor will typically refer one to you as well. It can actually cost you a bunch of money. All right. Let's recap what we discussed tonight. I appreciate y'all being here. We're gonna recap and then go into Q&A. We don't want to ignore those first-time home buyer incentives. They can save us a lot of money. We want to get pre-approved before we start looking at houses. Very, very important. You don't just want to go down to your bank for a mortgage. You want to shop. Use a broker if possible. Yes, I'm a little biased when I say that, but I have been a banker. I started as a banker. I've worked for retail banks, and now I am a broker. And I can tell you that by far, our rates are better as a general rule than everyone else's as a broker, right? Because we're getting wholesale pricing. So don't skip a home inspection. Don't buy directly from a builder without having an agent represent you. And then we didn't talk about condos, but if you're buying a condo, you do want to make sure that you get it, that it is a reviewed condo, or that's going to be a nightmare. So if anybody's buying a condo, that's a special conversation that we should have. So, question: has your time on this free webinar, this free class, been well spent? Y'all let me know. I'll wait. Awesome. And don't just leave just yet, because like I said, I want to do some Q&A, and you might find something valuable there. Thank you guys for responding. So do you feel confident in being able to purchase a home after watching this? That's the next question. I don't know what you knew about the home buying process coming into tonight, but it would be a safe bet that what we've covered today was new and valuable to you. So, question: would you like to spend more time with my team where we can personally invest in your home buying success? We are offering free right? Free, we call it the home buyer blueprint. Free home buying consultations to help you reach your goal. You just go to workwithchanning.com. Again, I will put it in the chat. I would love to talk to you. I'm the one that's in Florida, so I will be personally taking these calls. It won't be my team unless I get sick or something like that, but hopefully not. So I would really enjoy talking with you. It's my favorite thing to do. I love teaching, I love training, and I love helping. And so I would love the chance to sit down, learn about your goals, learn about what it is that you're wanting to accomplish um, in buying a house, and then help you put that plan together. Our plan can help you be ready in 60 days or less. If you feel like it needs to take longer than that, that's fine too. We just want to help you as a thank you for attending tonight. It's no cost. And, I'm not going to be like, we're not going to do the call unless you let me pull your credit. It doesn't go like that. We just want to help. So workwithchanning.com is how you can jump on the appointment. It will look like this on the page. You just pick the time. I think all of my slots right now that I have available are in the afternoon. If you can't get a time that works for you, the way that my calendar is set up, just shoot me a text message and let me know, hey, none of those work for me, and we'll see what we can work out individually. So workwithchanning.com. Would love, love, love to just talk to the people that just sat here and listened to me talk for an hour. Q&A. So that's all I had on the matter. Raise your hand, drop a comment in the chat if you have a question. I'm going to stop sharing now, and I'm just going to be locked in on you guys. Surely some of y'all have some questions. If you want me to unmute you and you'd rather just say your question, then just raise your hand and I'll unmute you and you can say your question. Or if you want to type it into the chat box, you can do that as well. But I'm here. So I've got the next 20 minutes or so set aside to answer questions, and we don't have 50 people on here like normal, so it probably won't take that long. But I'm here. Use my knowledge to your advantage. Somebody's got to break the ice. Be the first one. Man, you guys got it going on. No one's got a question? All right, let's see. Some of the common questions that we get are debt to income ratio. So what is that? So we look at everything that you have on your what is debt to income ratio? It's every bill that you have on your credit report, car notes, credit cards, it's not your cell phone bill, it's not utilities. It's things that are on your credit report. It's also child support, alimony, those types of things. So that's your monthly payments. We don't look at the balances, we look at your monthly payments. Then we look at your gross monthly income. So not your net income, not your take home pay. We're looking at what you gross. So what we do is let's just say that you make $5,500 per month and your monthly bills aside from rent, right? Aside from rent are we do factor in your mortgage payment, but let's just say your monthly bills are 1,000 and your new mortgage payment's going to be 2,000, right? We would divide that into 5,500. So what is that? 3,000 divided by 5,500 is going to give us a 54% debt to income ratio. So that's a little on the high side, but you would still qualify potentially with FHA. So that is the big number. That is the big thing that determines what you can buy. Is the debt to income ratio. And again, let me see if I can pull it up. I can drop that video in the chat for anybody that wants to learn more about that. Does Bayou have USDA loans? Yes, we do, Sam. We're very, very good at them. One of our between that and VA is our favorite loans to do. But we do offer USDA loans, and like I said, we have a special connection with one of our lenders, Equity Prime, and they They got a direct connect with USDA to get those loans done instead of 45 days. We're getting them done in 21 to 30 days. Great rates, all that stuff. So we absolutely do USDA. I'd love to chat with you about it if you'd like that. Trying to pull up my other frequently asked questions since you guys are so quiet tonight. Let's see. Is there a best time of year to buy? That's another one. Is it a good time to buy? So winter time is typically better than summer and spring, because there's less competition. So you get into the spring market when everybody else is buying houses, and you're going to have more multiple offers on homes. You're going to lose more deals, and it is a little more frustrating. In the winter, it is better, and I use winter, sparingly when it comes to Florida, but there is less competition than in the spring and the summer. So that would be my personal time. If does it really matter at the end of the day? Maybe not, but there is definitely less competition. Um, let's see, I don't see anything else. Um, oh yeah, what happens if I change my mind after I've started the process? So contractually, you have multiple opportunities to get out of your contract. One is the home inspection. You don't actually have to have a home inspection to get out, by the way. It is a contingency period, like I said, typically 10 to 14 days, but you want to read your contract to see how long it is. You can back out for any reason during that. After that, you either have to be denied or the appraisal has to come in low. If one of those two things don't happen, then the seller can actually sue you. You'll certainly lose any earnest money, but they could actually sue you as well. And we have seen that happen. Nobody ever goes to court because it's a pain in the butt that I've seen, but it technically can happen. How do I know if I'm ready to buy? Oh, here we go. What are the typical costs for inspections? Yeah, Haley, great question. So it's going to be dependent on the property size and location. In a bigger, in a bigger city, that you're not going to have to pay like a premium to go into some, really rural area, but the property size will make a big difference. And so I would say anywhere between upper 300s to 600 bucks for a home inspection. You pay that directly to them. It's not part of your closing cost or anything like that. The appraisal, on the other hand, is. So when you see your closing cost, that will get subtracted out of it when you pay that upfront. Great question. The five C's are always required for approval. Well, like I said, AJ, if there's one specific that you want to know about, let me know. But you can buy a house with no down payment if you have decent credit. You can buy a house if you have bad credit if you have a down payment. The main one that is always a no go is you got to have income, right? You got to have provable income. You got to have documentable income, which means pay stubs, W 2s, tax returns. You can't get around that one. The other ones are flexible, right? Because the seller can pay your closing cost. You can have a lower down payment. You can go with a no down payment program. Those types of things are flexible. It isn't always about you being the one that pays it out of pocket, although it can. Um, it's the income is the really really big one. Hopefully that answers your question. If not, let me know. Shoot me a clarification, and I'll address that. What is an escrow account? That's another question that we often get. So when you close on your home, part of your closing costs, like 50% of your closing costs are going to come from escrow. So you're going to have to pay 1 year of home insurance up front. You're also going to pay typically 3 to 6 months of property taxes up front. Those are considered escrow costs. What does that mean? Not only are you paying them up front, you're paying them every month unless you forego an escrow account and you decide to pay them on your own. Most people don't do that. So within your mortgage payment, you have what you're paying back for the loan. You have any PMI that you may have, which is private mortgage insurance. I'll address that next. Um, and then you have insurance and taxes. So if we say your mortgage payment's $2,000 a month, that's all in, right? That's the mortgage, the taxes, the insurance, all of it, all included when we give you that mortgage payment. What is PMI? PMI stands for private mortgage insurance. Private mortgage insurance. What it is if we didn't have PMI, everyone would have to put down 20% or more in order to buy a house. PMI gives you the ability to purchase a home without putting 20% down. And so what happens is you pay insurance for that. So if you default on that loan, you stop making your payment, the bank has to take your house back. The insurance company is going to give the bank 20% or 25% of whatever the value of the home is back to help them rehabilitate the home, get it on the market and sell it so that they can recoup their loss from, someone not repaying their mortgage. If they didn't do that, we'd all have to put 20% down, which would make home buying even harder than it already is. So that's an escrow account. That's PMI. How do you get the best interest rate? It's another one. That's simple. You have to shop. You have to shop around. The statistics say, guys, that 72% or more, 76, something like that, of first-time home buyers work with the first lender that they talk to, right? If you don't have someone comparing what you've been presented to, then you're probably going to get charged more than you would have. Now, like I said, we're a broker, so we can shop hundreds of different lenders, but that is, shopping is how you make sure that you get the best interest rate. Hey, what is escrow account? Did you hear me explain that just a second ago? Did it just come through late? Because I just talked about that. If not, I'll share again. But but I did just talk about that. Oh, you missed it. Okay. So an escrow account is money that you pay every month that the bank sets aside to pay your insurance and your taxes. So you pay the first year up front. That's part of your closing costs. That's why your closing costs typically 50%, especially in a state like Florida, where insurance is fairly expensive, is going to be your escrow. In addition to paying the first year up front, you're also paying monthly. So the first year covers the first year renewal, a year from when you buy your house. And then what you start paying immediately covers year 2 and year 3 and onward. So it is if you have an escrow account, it is you paying your property taxes and your home insurance monthly, but the bank is actually just keeping it and then writing a check whenever the premium is due, whether it's the end of the year or whatever your renewal is. Another one is what do I do if my appraisal comes in low, right? You love the house, you make an offer on it, you get the appraisal, you're buying the house for 350, it comes in at 325 or 315 or 340, whatever. Well, you have a couple of options. You can back out right then and there and say, I don't want to do this. Not the best decision in my opinion, because at least you can try to get it negotiated for a lower price. But typically what you're going to do is you're going to renegotiate. So you're going to tell the seller, this house did not appraise for what it was supposed to appraise for. I need you to come down to 340. And they will either say yes or no. If they say yes, you renegotiate, everything moves along fine. If they don't, then you back out, right? Or you have to come up with the difference out of your own pocket. Most people aren't going to do that. Some people do. They just love the house that much. They're going to come out of their own pocket to cover the difference. That's kind of what happens if you have a low appraisal. How does your credit score affect your mortgage options? Well, typically the higher score you have, the better interest rate's going to be. Can that ever be opted out of? Is the 50%? I assume, AJ, you're talking about the escrow account. So you can opt out of escrow in certain situations and depending on the lender. So a lot of lenders won't let you do it unless you put 20% down. We have some that do. You then just become, responsible for making those payments each year. You're not saving any money typically by opting out of it. Sometimes you're saving, paying for it up front. But even certain lenders, even if you choose to opt out, will still make you prove that you paid a year up front. The best thing to do in that situation, like if cash is tight, is to just have the seller pay your closing costs. They can cover 6% of the purchase price, which is usually way more than they'll ever give you. And so if money is tight on closing costs, I would highly recommend go ahead and negotiating with the seller, because it's kind of like free money to you. I mean, I hate to say it that way. You might have to spend a little bit more on the purchase price, but honestly, like if the difference is $6,000 in the purchase price and them giving you $6,000, it will take you forever, right? You would have to own that home for 20 years probably to come up with the difference in the $6,000, but the $6,000 in your pocket, not having to drain your savings account, having kind of that peace of mind, that makes in my opinion, that makes a much bigger difference. So we're really big advocates for seller paid closing costs. It's a great tool that allows a lot more people to buy homes. Great question. All of them good questions. Anybody else have questions? Interest rates fluctuate daily too, because they're driven by the market. So if you're shopping for loans, and I mean, they don't always change drastically daily, but they do change. So if you're shopping different mortgage lenders, um, sometimes even by the hour, if there's like an announcement about inflation or something like that, just something that's important to know on rates. They do fluctuate pretty much daily. Most of the time, when it's normal, they don't fluctuate much, right? It's nothing noticeable. Here lately, with what we've been dealing with, a day could mean a $2,000 difference. So, um, just something important to know as you go throughout this. What are my favorite lenders to work with? So, as a broker, we use a lot of different lenders, and each one has kind of like their specialty, right? So we do use Rocket Mortgage a lot. I would never advocate for a first time home buyer to go directly through Rocket. One, because they're going to rip your head off. They're very expensive. And number two, you don't get the same service. Because their loan officers are very inexperienced. But as a broker, when I'm your loan officer, and I am experienced, working with them is pretty good. They have some pretty good programs. Um, so and it's not like, so let's clarify that too. Like, oh, you're a broker, so does that mean like you're a middleman? Well, sure, kinda, but you never talk to the lender ever unless something goes wrong, right? Like you've got to verify on a phone call, and even then you're not talking to the lender. We handle the process from start to finish for you. So for all intents and purposes, we're your lender. We're just not the one writing the check. Um, so we use a lot of different ones. Equity Prime, again, as a broker, none of these are lenders I would use if I wasn't, working with a broker, because their retail departments are not great. But as a broker, that's another one that we use. Sam says, "How do I get on USDA's approved list?" Um, I'm not sure what you mean by that, Mr. Sam. Uh, like if you're asking how you get approved for USDA, we can help you do that. If I'm misunderstanding, then just let me know. Great questions. Oh, location. Yeah. So look, check this out, man. I will drop a link in the chat where you can look up any area that you might be interested in, and it'll tell you if it's an approved area. So all you have to do is kind of zoom in, whatever area you're looking in. I think you said you were in Sanford, but um, yeah. So the areas that are not eligible on this map that I just posted will be orange, and then everything else that is eligible will not be orange. Orange, kind of dark, yeah, peach, whatever. Um, Mr. A or AJ, I work with everyone. Yeah, there's no ageism. We can't discriminate based on, I mean, you have to be, 18 or older, but uh, we work with everyone, regardless of age. Would love to work with you. Any more questions, guys? I got a couple more minutes and then I'm going to jet out. I'll stay as long as we're asking questions, but awesome. Well, want to remind everyone, workwithchanning.com if you would like to book an appointment with me, and we can just talk. There's no obligation on the call, right? If you just want to get more questions answered or get a better idea based on what your unique circumstances is, I will ask you questions like, how much do you make? What do you have a down payment? I will ask you all the questions around what we talked about tonight and help you get a really good idea of if this is something that you should do now or if you might need to wait. Um, and we will move it from there. So I really appreciate December is busy for everyone, so I really appreciate you all hopping on tonight. And I look forward to working with you in the future. I'll follow up, next week. This is going to be our last home buyer class for this year. We will pick it back up next year. So if you thought it was helpful, definitely let some friends or family know if they're looking. And otherwise, thanks so much for being here tonight. I will. There is a recording available, so if you want it when I reach out to you, just let me know, and I can give you the recording of this as well. So, anyways, have a good night. Thanks so much for being here, and I will talk to you guys soon.